Hello students, welcome to Auditing and Assurance class. It is a class 1 and I am Dr. Indrayani Katti. So here this subject is there for final year and chapter 1 contains these points. Okay, so what are the learning objectives of this chapter? At the end of this chapter, you will be able to understand and explain the introduction, meaning, definition, objectives of auditing, accounting versus auditing, advantages and limitations of auditing, classification of audit, audit program, and what is the appointment, how an auditor is appointed, or the process of audit appointment, and what are the qualifications required to become an auditor, and removal of a company auditor, and what are the powers, duties, and liabilities of a company auditor. So all these are contents of first chapter, but I will cover the introductory part, meaning and origin and evolution of auditing and definition of this in this class. So here, what is audit means before going to the meaning of this, why this is all required, why the companies go for auditing the books of accounts. Okay, the question arises here is the management is different and the owners are different. Earlier it was not the fact. He himself was managing the firm, the owner himself was managing, he himself was recording the data, financial data, and he himself was getting whatever the profit is there that was also enjoyed by him. But as an how the industrial sector started growing, okay, at that time there is a difference in the owners as well as one part, the other side, the management. So both of them are not one and the same. The owners fund the company and funds are managed by the management of the organization. Funds are employed by the management and thereby earning the profit, and out of which the part of the profit is distributed to the shareholders or the owners of the company in the form of dividend. But the thing here is the investment which is made by the company's management is all funded by others. So there must be an expert person who has to cross verify, examine the books of accounts which are maintained by the company are all properly done, intact as per the provisions, as per the standards of accounting. So for that purpose, there is a requirement of appointment of an auditor. Okay, let's come to the accounting information, financial statements, which are prepared at the end of the financial year. Okay, so financial statements, the income statement and the financial position statement, statement of showing, which shows the financial position of an organization. Okay, along with this, all listed companies will have to prepare the cash flow statement also, right? So these financial statements will get the validity once these are audited by the auditor of the company. Unless the books of accounts are verified, vouched, and audited by an auditor, these books of accounts as well as the financial statements doesn't have any value at all. Okay, so that's why the audited books of accounts, the audited financial reports are all used by the users of accounting information. We say them as users of accounting information. Who are the users of accounting information? In fact, the first category, that is shareholders, they are the owners of the company. They must know the position of the company as well as what is the ultimate result that is earned, or they have incurred the loss or they have earned the profit. So that should be assessed by, known by the shareholders. That's why they make use of the accounting information. And the management also makes use of the accounting information because of the to check the performance of the organization as well as to take the crucial decisions related to future, right? For that sake also the company's management will make use of the accounting data. Next is the investors. Before investing in companies securities, the investors will also go through the financial statements of an organization. They are also making use of financial information. And next comes the government. The government is going to impose the tax. So what is the exact amount, taxable amount or taxable income of an organization? So for that sake, the government will also go through the information of companies. And next, last category is analysts as well as researchers, we say, right? So they are also making use of accounting information, and they analyze the performance of the company, and they also suggest the management in taking crucial policies, making decisions, etc., etc., right? So this is what is, in a nutshell, what I can tell is uh, uh, the audited books of accounts are utilized by all these categories. They are called as users of accounting information. Right. Let's move on to the meaning of auditing. Auditing is a systematic examination of books of accounts and records of a business or other organizations in order to verify and to report upon the facts regarding the financial operations and the results thereof. So what exactly here is auditing is systematic examination of books of accounts. Whatever the books of accounts which are maintained by the accountants, in organization. In fact, an audit does not include the preparation of accounts. This is not at all the job of an auditor. So what he does is he examines the books of accounts which are maintained by the accountants of the organization. Okay. So that's why here what we can say is, it is, in simple words, auditing is a process of examining books of accounts and other related documentary evidence by an independent qualified person. So what is this? It is a process of examining books of accounts and other related documentary evidences. For everything, whatever it is mentioned in the books of accounts will be having a documentary evidence. So without the documentary evidence, nothing, no figure, no amount is included in the financial statements. Okay. In the books of accounts, before writing, they should have a documentary evidence. Okay. So that's why a person who is called as an auditor, what he does is he examines the books of accounts and other related documentary evidence. That is, by who is he? An independent qualified person. It means he is a member of ICAI. He is a chartered accountant. Okay. He is an independent qualified person. In order to, why does he examine? In order to ascertain the accuracy of the figures appearing therein. So what all the figures appeared in the books of accounts, in the financial statements, in the documentary evidences, or to ascertain the accuracy, whether they are true or not. To ascertain that, this examination is done by an independent qualified person. Okay. The person who does audit is called as auditor. Okay. The auditor expresses his opinion that whether the financial statements show a true and fair view of affairs of the organization or not. He has to give his opinion at the end of the auditing process. He needs to express in the audit report that the company maintained the books of accounts, the financial statements are prepared by the company. So all these show a true and fair view of the affairs of the company. Okay. So otherwise he will not express that, he will prepare a qualified report where some reservations are made, right? He makes some remarks over there that the company is not performing good and the figures, whatever are there, they are not true and fair. Likewise, also he can express if he is not satisfied. Okay. So let's move on to the origin and evolution, sorry, origin and evolution of auditing. Okay. The term audit, in fact, it is derived from the Latin term, which means audire. Okay. Which means, audire means what? To hear. It is derived from the Latin term audire, which means to hear, listening carefully. Okay. In early days, an auditor used to listen to the accounts read by an accountant in order to check them. It means an auditor is an expert person in the accounting field. And what all are the books of accounts maintained by an accountant? If the owner doubts, if the owner feels that there is something went wrong or there is a fraud, at that time he used to ask the auditor to listen to the accountant what all is done. Okay. So auditing is as old as accounting itself. It was in use in all ancient countries such as Mesopotamia, Greece, Egypt, Rome, UK, as well as in India. We do find, in Vedas, the Vedas contain reference to accounts and auditing. An Arthashastra book was written by whom? Kautilya. Okay. A detailed rules for accounting and auditing of public finance also. So in those days also we found, and it is an Indian origin also. Okay. So here, the what you can tell as the scope in the earlier days in 1464, an Italian who whose name was Luca Pacioli. Okay, he developed a double entry system of bookkeeping. So for the first time, he has developed the double entry system of bookkeeping and described the duties and the responsibilities of an auditor. In those days only, he explained all that. And that's why Luca Pacioli is called as father of accounting. Okay. So now you know how the thing has been done and how it is all developed over the time. We will look at it. The original objective of auditing was to detect and prevent the errors and frauds. Okay, so actually it began with detecting and preventing the errors and frauds. Auditing evolved and grew rapidly after the industrial revolution in 18th century. So in 18th century, the industries started developing at a rapid pace. And it was the Companies Act of 1913, not 2013, 1913, which made it compulsory for every company incorporated under the Companies Act and under the Companies Act to have the accounts audited by a professional auditor. So right from 100 years old history only we have that we had an act, Companies Act 1913. So that had made compulsory for all the companies which are incorporated under this act have to get audited by the professional auditors. So this act first time prescribed the qualifications which are required to become an auditor, which are required to become an auditor, and mentioned his powers, duties, as well as laid down the procedure for his appointment, how to appoint him, and in what is the procedure to be followed while appointing him. Everything, the detailed explanation about the powers, duties, and appointment, and what are the qualifications to become an auditor. All these were explained in the Act itself, 1913, right? So Companies Act 1913. And in fact, in the year 1949, the Chartered Accountant Act was passed, and according to which the regulation, control, and management of the profession passed from the central government only to the progression and in the hands of ICAI, okay, that is Institute of Chartered Accountants of India. And it works under the overall supervision of the government only, but enjoys a complete autonomy to evolve its own educational and training programs, etc., and develop the guidelines of accounting field. Everything is the whole accounting world in India, whole accounting arena is managed, controlled by ICAI, by the ICAI only. Okay, so this is what in India, what we have our own institute to control the area of accounting as well as auditing by the ICAI Institute. Okay. Now, auditing evolved and grew rapidly after the Industrial Revolution in the 18th century. With the growth of the joint stock companies, the ownership and the management became separate. Earlier, he himself was the manager, he himself was the owner, he himself used to enjoy the fruits of his business. Okay. But after the development of this joint stock company form of organizations growing very rapidly, so at that time, this has separated both the parties. The owners are different and the management. The one owners fund the organization and management employ the funds which are provided by the owners. So both of them are different. That's why the shareholders who were the owners needed a report from an independent expert on the accounts of the companies maintained by employees and managed by the board of directors. So accounts are maintained by the employees and the whole organization is managed by board of directors. So to have a check on these people, what all the books of accounts are prepared by the company and they are given the returns, the ultimate result of the organization is given in that books of accounts, okay, in the financial statements, whether everything is right, true, whether the affairs show a true and fair view or not. To cross verify that, there is a requirement of an independent expert. He himself is called as an auditor. Okay, so now let's move on to the look at this objective shifted from earlier. The main objective of auditing was detection of errors and frauds, but now the objective is shifted from this detection of errors and frauds to true and fair view. Okay, so now we are finding this not only just a detection of errors and frauds, but the affairs of the organization should show a true and fair view. Okay, the objective of audit shifted and audit was expected to ascertain whether the accounts are true and fair rather than detection of errors and frauds. In conclusion, it can be said that auditing has come a long way from hearing. From hearing, it is audire, okay, the Latin term audire, which means to hear. Okay, so from hearing of accounts to taking the help of computers to examine the computerized accounts. Now everything is mechanical, everything is done through the electronic device only. Computer accounting system is adopted everywhere, and we have shifted from from the traditional kind of auditing to computer accounts. Okay, so we need to examine, as an auditor, the auditor has to examine the computerized accounts also. Okay, so now let's move on to the definition of auditing. Spicer and Pegler defined auditing is such an examination of books of accounts and vouchers of a business, and it will enable the auditors to satisfy himself that the balance sheet is properly drawn up. See, look at this. What is this? Auditing is such an examination of books of accounts and vouchers. Vouchers are the documentary evidences. Okay. So books of accounts as well as vouchers of a business should be examined by an auditor. Okay. As it will enable the auditor to satisfy himself. Then after examining, after watching the documentary evidences, the auditor satisfies himself that the balance sheet is properly drawn up so as to give a true and fair view of the state of affairs of the business, and that the profit and loss account gives a true and fair view of the profit or loss for the financial period. So according to the best of the information and explanation given to him and as shown by the books, and if not, in what respect he is not satisfied. It means at the end of the auditing process, he has to express his opinion. If he satisfies, he says that the financial statements show a true and fair view. So two financial statements, he'll speak about the balance sheet as well as the income statement. So income statement highlights or emphasizes on the profit earned or loss incurred, and the balance sheet states about the financial position of an organization. So he needs to satisfy himself. If he satisfies, he says that the financial statements are true and fair. Okay, they show a true and fair view. Okay, otherwise, in what respect he is not satisfied, he has to express that also. So this process is known as auditing in the words of Spicer and Pegler. Okay, now let's move on to the another definition, simple definition. Taylor and Perry, they defined audit is defined as an investigation of some statements of figures involving examination of certain evidence so as to enable an auditor to make a report on the statement. So audit is defined as, it is what? Tell me. investigation of some statements. What are the some statements? Two statements are there: income statement, that is P&L account, and balance sheet. Okay, so some statements of figures. There are liabilities, assets, there are expenses, incomes in the P&L account. Okay, so figures are examined, investigated by him, involving examination of certain evidence, that is documentary evidences. He cross verifies, that itself is known as vouching, so as to enable an auditor to make a report on the statement. Okay, so this is all about a definition of Taylor and Perry. One more simple definition, let us go through. Lawrence Dixie. Okay, an audit is an examination of accounting records undertaken with a view to establishing whether they correctly and completely reflect the transactions to which they purport to relate. Okay, so whether everything true and fair. So in that only we'll get to know what is audit. An audit is an examination of accounting records undertaking with a view to establish whether they are correctly and completely reflect the transactions to which they purport to relate. Okay, so this is in that words. So in conclusion, what we can tell, that the auditing meaning you have learned here. After going through few definitions, we'll understand that an auditing, what is auditing? It is an intelligent and critical examination of books of accounts of a business. Okay, it is done by whom? An independent qualified person. Auditing is done by an independent qualified person. So next, it is done with the help of, how does he do? He does the evidences, documentary evidence examination he does. Okay, it is done with the help of vouchers, documents, information, and explanations received from the client, that is client company. Company management may be there, accounting people may be there, or the person who has recorded, right? So concerned to the documents and all. So he will have to provide the information. The management has to provide the information. If any explanation he requires, that it should be provided by the company itself. Okay. So next one, the auditor satisfies after doing all this examination, vouching, that is going through the documents, information, and explanations. The auditor satisfies himself with the authenticity of financial accounts prepared by a particular period. Okay, prepared for a particular period. So if he is satisfied, at the end he will express his opinion in the form of audit report. Okay, so this is about auditing. You have learned in this class the meaning, the origin of auditing, and evolution also, how it has grown right from the Kautilya's period only. Okay, so in the Arthashastra book, he has mentioned about accounting as well as auditing of financial statement. That is, state finance was done by him. And he also listed different kinds of frauds, embezzlement, and prescribed punishments for that. Okay, to deal with all these things, in Arthashastra, we do get all such information. Okay, which was written by, what do you know? What is his name? Kautilya, Chanakya also we call him. Okay, and about this also, evolution also you have learned. And after that, you have gone through the definitions of different authors. And at the end, after going through, again, you have understood the meaning of auditing in simple language, right? So thank you very much. Here I will conclude my class. And in my next class, with a very important part, that is objectives of auditing, I will begin with. So stay till that and watch till the end, and ask your friends to subscribe to my channel if you like the video. Thank you.